Hello everybody, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Monday, August 15th, 2022 with a Forex Trading Strategy Analysis webinar for you. And before we get into everything, we just want to remind you with our disclaimer that this webinar is for educational and purposes of just training you on how different techniques are used in the markets. This is not for actual financial advice. Remember that we are in a bit of a lag here with the data, especially in the future stuff we relate to in tandem with the Forex markets as well. All right, with that, we are going to pull up our live action screen, which we have here, and we are going to get on with our analysis. All right, so please read the disclaimer once again, and if you are watching the video, you can always pause it too, and we'll take care of that. So we are going to go to the forex-trading-unlocked.com website, pull up, excuse me, the workstation page from that tab, and we're going to toggle down. Well, we had some numbers that came out in Japan today. There's nothing left for today except for, oh yeah, there is one more coming out later on, a tertiary industrial act for the Japanese yen. But we're not going to worry about the numbers today. We're just getting on all the technicals. We're going to get rid of this little widget thing here, get rid of the volume. As you can see, the Euro US dollar is starting the week off in a bad way. So let's take a look at the Dixie real quick. If you look at the dollar index here, you can see that we have been under pressure, obviously, until Friday of last week, and that changed everything. We had a big bounce in the dollar to end the week after being under pressure for multiple days, which was kind of interesting when we have how the economic numbers paired out last week. There was a lot of things that really we had knee-jerk reactions, and it really set off a lot of crazy volatility. I'll tell you what, the Euro US dollar has been one of the toughest trades over the past 3 weeks. As you can see, how it really is traded in a very tight range. Last week it actually did set somewhat of a trend, which was interesting enough. And by the way, just to remind you, if you haven't done so, I don't know if you're watching on Twitch or on YouTube, make sure that you like and subscribe if you haven't done so already, and leave some comments along the way in the comment section. We always try and answer those and interact. If you do like these videos and some of the analysis techniques, if you learn something, leave a comment and let us know. If there's something you'd like to learn about, leave a comment and let us know. As well as if you have any questions during the video, you can put them in the chat on either YouTube or Twitch. Right now we don't have Discord up because we have been having some issues with our streaming software lately, integrating everything. Hey, we do have someone saying hi on Twitch. Hey, Elamir, nice to see you. Glad that you're here for the video. Thanks for popping in there on the chat. We appreciate it. Cool. All right, well, that's good. All right, so we have that up. Now, I am going to make sure that I give you guys some good links today for showing up. In fact, the first one I'm going to do is I'm going to give you a free copy of a book on trading. It's not my book. It's How to Day Trade for a Living. It's a very good book. I've read it myself, and I'm going to put this out on Twitch right there. This is a totally free book. All you have to do is answer a survey. It costs you nothing. So just to let you know, I put that out on Twitch for you guys, and now it is out on the YouTube thing. And hey, we got already a like on YouTube. Thank you very much, guys. We appreciate that. And make sure once again that you leave any questions, and we'll try and get to those as we get through this this webinar. All right. Okay. So with that being said, let's talk about the Euro US dollar. All right. So Dixie, as you can see, was under pressure and then rallied on Monday. So that put pressure on the euro because the Euro US dollar, as you know, is the biggest weight in the dollar index. So as we are talking right now, we have this market on the offer. You can see that it is hanging on its lows. It hasn't been really pounding lows, by the way, just to let you know. It's been just kind of slowly eking its way lower over the course of the morning. It was lower overnight already. It had a nice little distance, but it was kind of bouncing around off the lows. It wasn't really pressuring them, and it looked like it might want to, it was waiting for the U.S. markets really to open to figure out if it was going to get follow through or not. Well, obviously we got the answer on that one, right? So we are getting some follow through to the downside. Now, if you notice the bar from Friday right here, we had a big sell-off after the numbers came out. Now remember, last week we had the CPI, the PPI, you know, and of course President Biden told us now that we have zero inflation. I think he's wrong on that one. So, but the numbers, even though the press is saying that we've hit peak inflation and what have you, remember that it really doesn't mean anything what they're talking about, because inflation hasn't stopped. All it has done is slow the rate of inflation, which was already accelerating at a high rate of speed. So think of it more like this. If you look at the numbers from last week, what do they really mean? And you can tell by the way that the interest rate markets reacted. Was that did the numbers beat forecasts? Were they better than expected? Yeah, they certainly were. The only thing is that it's equivalent to saying that you were driving a car at 150 miles an hour and you're definitely way over the speed limit, and now instead of going 150 miles an hour, you're going 145 miles an hour. You're still going way over the speed limit. You're just not going as fast as you had been going over the speed limit. So keep that into perspective, please, when you're looking at these things. Let's see, is it possible of talking a little louder? You know what? I can try and turn up the mic. Let me see. Thank you for letting me know that that's not coming out clear for you, my friend. Let me see what the levels are doing here. Mic levels. I think that's making things a little bit better, and I can even draw this a little bit closer to myself. So I hope that is working for you. Try and speak a little louder. And usually we have mic is pretty good, but we've had some issues with the streaming, so maybe I have to adjust these levels. Let me see if I can boost this up a little bit. No, we got that all the way. There we go. Okay, hopefully that worked out for you, my friend. Thank you for letting me know about the vocals on there. Yeah, and if anybody on YouTube, we don't have Discord running, so if you have any problem with the audio or visual, please let me know. Like I said, when we started out, we had some issues with the streaming software thanks to Microsoft and the metaverse and buying out a company and then closing it down in 30 days that we were all linked into. So, but now things seem to be working. All right, so let's get some numbers going here. That's what you guys want to know about, right? Where are we going? All right, so the trend obviously is back in gear. We're playing with support here. Now, this market has been in a chop zone. So really, as far as bullish, we have to look at the high from a few sessions ago, and we have to look at this low from like a week and a half ago. This right here is our bobbling range. Now, we had an upside target of $03.72 last week, and the high ended up being, what was it, $03.68. So for those of you that follow us on our videos, you know that we were looking for that upside target. We fell just short of it. Now that was our extreme. Our initial target was a little bit lower. It was more around 102.80, something like that. So we hit into the target zone and just fell a few pips shy of the ultimate extreme. So we're really happy with this little area that we have set a short-term higher move high in. Now remember that the trend has been in a correction, came off a lower move high, higher move low, higher move high, higher move low. This is a higher move high. However, in the grand scheme of things, it's a lower move high. Good thing to take a look at, and this is something you got to remember, folks. Where you had support and resistance, usually it ends up doing the same in the opposite. So where we had support here, for the market, as you can see these two lows right here? We have this low right here, and we have this low right here. This is where the market had found support. Now we drag it out over here, and we have, look at this. This is where the market found resistance. So if this trend is really solid, which it seems to be, it has been for a while. Now remember, we came out of this trend last week. Okay, but that's only on this shorter term basis here. If we start to go out like this, well, then you can see that we haven't really breached a longer term trend. And if we start going back out this way, you can see that this really is the real downward sloping resistance line, keeping this trend intact. So remember, if you've been watching our videos, we've been viewing this trend higher since the middle of July into the middle of August as an upside correction. This is something we've been very, very solid on our stance, saying this is a correction. This is not Please resend the link for the book. I lose the connection. I can do that for you, my friend. I will get to that in just a second. So anyhow, once again, if this is a corrective move, which we had been assuming it would be because the overall trend is bearish, we were looking at this as a bounce. One of the main reasons the Euro US dollar has been getting a lift is, remember what the Treasury bond market has been doing. Interest rates have been trending higher. Now, interestingly enough, today the bonds are actually up. They're at 141.18. If you want to know how to, now futures we can't list in live real time, so I can't pull up my futures account and have the live charts and data up there. But what I can do is use our tab on the Forex-trading on -unlock.com website. Go to the futures tab, go to the US 30 year, and we can pull up the chart that goes through. Pull up the daily as it's through Friday, and we can see that the CME right now on their site, they're trading at 141.18. Now, interest rates, remember, are a function of currency pricing. So 141.18, there we go, 141.18. So as you can see, the interest rate market is higher. When bond prices go up, 10-year run-up prices go up, that means that rates go down. That puts a little bit of a tax pressure on the US dollar. That's where we have had this. It's helped to aid this correction. Now you see that the Euro US dollar is going counter trend, meaning you would think that the bonds would and the 10-year would be going down to help give strength to the dollar. It's not that that's not happening overall. We know the interest rates are going higher by the Fed, even this meeting in September, which is a month away. Expectations are not as high as they were for a 3/4 point, but a 1/2 point is definitely on the table. So let me just go back to this real quick and get this for our friend on Twitch. Okay, we got that. And let me send this out to you. Alright, so here we go on a Twitch once again for you. Okay, how's that, my friend? I just resent the link for the free book. And for any of you else out there on Twitch, there is the link on the chat for you. Alright, so Euro US dollar, we can see that the solid correction is come to a nice halt last week, and now we have some selling pressure going on. Obviously, we are on the offer right now. I think you should be expecting a test of this $1.23 area this week. Use caution here. If you are an aggressive bull, okay, any trading below here, besides confirming a lower move low after a higher move high, has us in neutral at the very least. Be very cautious buying into this break here. If anything, I would look to buy it much lower when you get a valid signal. Right now there is nothing shaping up to be a buy signal. It is shaping up to be more of a sell than anything else. And remember, this low here, if we take it out, it's just above this low here. So there's two key lows here where if we fall below this, I mean, look at where we're at. And also take a look at this. Remember, this has been a corrective move. It has been making higher move highs and higher move lows. What did it do today? It fell through that. So right now with this upward sloping support line, keeping this correction intact has been violated. Now we are looking to make a run for this key support area, which if we do take this out, most likely you're going to see the euro making lower move lows on that, not just the daily, but the weekly and the monthly basis. So to the short side right now, I would just make sure that if you are short, make sure that your stops are somewhere around this area right here, because anything above this $0.0370 area will, if we come back up here and breach this, well, that means we have a short-term neutral to higher, definitely confirmation with the Euro US dollar, especially if these lows remain intact. But right now, with the pressure that we're under, with interest rates, with their pricing going higher and the euro going lower, that tells me that the numbers in Europe are definitely that bad. Remember, the EU is collapsing financially. Their debt is skyrocketing, and dissension amongst the euro states now, or countries, if you will. They're not states. They kind of view them as states now and not sovereign countries. There's a lot of issues, and I would be I've been saying this, if you watch our videos for a long time, that it's not out of the realm of possibility, and it's really getting tossed around a lot now in the EU, that Germany is going to secede from the EU, and many other countries may also. The odds of the EU still being held together in, say, 10 years, let alone 5 years, is probably very, very doubtful, especially the longer that the Russian-Ukrainian conflict remains. Like, people think that NATO will hold up, the EU may not. So, and if that's the case, believe me, the value of the euro is definitely, right now, long-term. People who were very bullish, were bearish to dollar and bullish on Europe, were saying that we would never see the euro US dollar trading sustainably below parity this year, let alone next year. I think that besides dipping back below parity again this year, it is a very good chance that we will see the euro trading in the 90-cent handle, 90 to 95 area by the end of the year. Not to mention next year, I don't even think we'll have a chance at getting above parity if it's anything more than just a spike for a day or two. Their currency is dissolving. It is the biggest currency out there next to the dollar, so that is a very meaningful thing. I think it's going to be a very tough winter when it comes to the euro. Remember, they're putting on all kinds of, besides the sanctions on Russia, they're all starting to cripple the European countries. They just changed all the energy requirements again in the EU, putting restrictions on even factories and how much power they can use. Well, if you can't use the power you need to produce things, then you're going to be eliminating production capacity just from that alone. Not to mention the higher cost of energy and the restriction on people. I mean, now they're talking about businesses having to run during the winter time, keeping their offices at what would be, to Americans, 66 degrees. 66 degrees in the summer, just to go in for a little bit to cool off, will start getting really cold after a while. So can you imagine in the wintertime, if you have to be at 66, what does that mean during the summertime that they're going to stick you at? 78, 80 degrees? I mean, the work conditions in a area of the world that prides itself on workers and what have you, and defending them and taking care of them, they've done nothing but restrict their rights, make their work environment harsher over the past 18 months, let alone the past 6 months, especially since this conflict has been going on with Russia and the Ukraine. All right, so we know we're going for lower levels. These are extremes, baby. Anything, like I said, this is the breakout zone. I doubt we're going to get above 103.70. If we do, well then, it's a whole new thing. Then we're looking to get up towards this 105 even area. Very doubtful. But fresh buying most likely would occur if we could get up in that area. I think we've hit the correction top. I'm never trying to pick a top or a bottom, but right now we definitely do have a short-term high in this news. That's confirmed by 4 days of trading, and we're looking to press newer move lows on the daily basis. Any questions on that? If you got any out there, please just jump in here on the chat. We got a few more people on YouTube and Twitch. Thanks for joining us today. And the likes we got another like on YouTube. Thank you very much, guys. We really appreciate that. And if you haven't subscribed to either channel, make sure you do so, please. We would really appreciate that. Pass it on to your friends. Remember, leave some comments if there's things that you want to learn about that we haven't covered, or that you want to know more about. We will definitely take that into account. Let's look at the British pound US dollar. And for transparency's sake, by the way, I've been short the euro US dollar since Friday. So I am up slightly in my position. Nothing to write home about, but I am looking for the follow-through move to the downside, and I'm looking to keep that trade on for a while. The pound US dollar, this one's an interesting one. This one uniquely doesn't have all the issues that the EU does because of Brexit. Remember Brexit that we used to talk about for like 5 years, and then it finally happened, and now we don't talk about it at all? Well, that's because they have a sovereign currency, and they also don't have the energy problems that the whole EU does. So as this market is still weak against the dollar, it's not as weak as the other ones are. So I would say that be careful trying to trade the tandem trade. I would say that you want to watch this range here of $1.22, basically $1.23 even, down to basically $1.20 even. This is going to be a choppy range trade. Obviously, you can see that. Another thing is if you look at, just like we did with the euro, you can see that this little area here gives the market support, gives it resistance here, and also the key thing is that we did not take out this high, and we did not take out this high. So the mere fact that we've been trending lower move highs in this situation keeps this market suppressed. This is a big area here where I think you have to watch out for. We need to accelerate a move above here in this zone. If we can pierce this, well, then this market has a chance at not just being neutral to higher, but actually setting an uptrend. This could happen. This is very likely that we could have a major divergence between the pound as far as the European currencies and the euro. Okay, meaning that the Euro US dollar, like I told you, is most likely going to keep on being suppressed and head down towards that 95 cent, 90 cent area. Like being in the 88 to 85 cent area within the next year is very, very possible, especially if the ECB does not take an aggressive rate hiking stance, which, yeah, good luck with that one coming out, right? So, but this is all technical. So if we could technically get above here, that would change the trend. This correction that we have now would no longer be viewed as a correction, but more of a bottoming pattern here. And I would be mindful of this because we do have a somewhat of a head and shoulders situation panning out here. See this right here? All right, for those of you who are not familiar with head and shoulders or think that it's just too basic of a bar charting thing, well, you can believe that all you want, but let me tell you something. I've been trading for over 30 years. They work. They work. They don't work all the time, but they do work a lot of the time. So, and it's especially on the longer term scales. Now, once again, never try and pick a top or a bottom. However, if it walks like a duck, if it quacks like a duck, it's probably a duck, right? So as you can see, we have a shoulder here, we have a head here, and a shoulder here. Here's our neckline. Let me make this a little bit darker. There we go. So you can see this neckline right here. So if we were to breach the high from last week, which also takes us through this little critical resistance support zone, that puts us pressing these highs and new move highs. If that's the case, I would be very cautious. Do not fight this. If you are a bear, be careful, because if we take out this neckline, odds are in this area here, we're going to have a lot of accelerated buying going on. You can even, if you go back to this chart, or excuse me, back on the chart, and we come into this area here, I mean, by attrition, we're coming out of the longer term downtrend. So this does look like we're trying to bottom out, but we didn't rally above this downward sloping resistance line, keeping the trend intact. By attrition, we went through it because of the sideways nature of this trade. That's why I'm saying these conditions give us a real key setup for divergence. However, if we go from the head to this shoulder here, we can see that today's trading, I have to make that a little larger for you. Today's trading, we are bobbling on this support line. So if this head and shoulders is to be negated, we will continue lower, take out this shoulder line here at $1.20. That's why this is a key breakout area. And if that's the case, well, that's very negative for the pound US dollar. That, in this case, that would mean that the pound is still relatively weaker to the US dollar, just like all the rest of the currencies. Remember that we do have a Fed meeting in a month coming up. Until that does occur, it is very likely that the US dollar is going to see more strength than weakness. All right, any questions out there on YouTube or Twitch about anything we're talking about so far? Hey, we got another like on YouTube, got someone else watching. Thank you very much. We really appreciate that. No questions. Make sure you hit that subscribe and like button if you haven't, and leave a comment also. And just because you guys are here on a Monday with me, I'm going to send you something else. If you like our analysis, you can check me out on TFNN almost every Wednesday at tfnn.com at 8:40 Central Standard Time. I do an interview with Tommy O'Brien on the Tommy O'Brien Show. Those guys have a lot of great shows on all kinds of markets every day from Monday through Friday, and I'm there usually every Wednesday at 8:40 a.m. with a live interview with Tommy O'Brien. We talk Forex, we talk crude oil, we talk interest rates, we talk numbers, everything that's going on in the macroeconomic environment of trading. So I just put up a link to the Tiger Forex report on YouTube and also on Twitch. There's a 30-day money-back guarantee. I do a newsletter every week where you get my views on Monday morning of all the major markets, and if there's something during the week that really changes things, we give you an update. It's a 30-day money-back guarantee. It costs you nothing if you decide not to keep it, and if you do, it's a great report. And check it out on the link there. Check out the other stuff on the website. Those guys do a great job, and you can find me on their YouTube channel or on my YouTube channel. I have a playlist of things from past episodes where I've been interviewed on tfnn.com. It's not about me. It's about the topics of conversation that we have. I think you guys as traders would really, really be able to utilize that stuff. All right, so pound US dollar, we're looking for support to keep on hitting it. Notice how this one here has come back a little bit on the day. Let's look at the euro US dollar real quick. Still remaining on the offer. So this is where the weakness is here. You can see that the euro, like I said, is definitely weaker than the pound. Let's go to the US dollar Swissy here. US dollar CHF. There we go. All right, you can see this one also is higher on the day, but not quite. It came back off its highs just like the pound is coming off its lows. This one is not accelerating or now to the downside. It's definitely come back as strong against the dollar versus the other European currencies. This thing bounced out through parity twice after some big volatility, came off. Now we are definitely in a downtrend after having ridden a fierce uptrend. We had this high, we made this higher move low, lower move high, lower move low, lower move high. We've made lower move lows and lower move highs consistently. All I can say is this trend, the Swissy is trying to keep strength against the dollar. However, it could be bottoming out with that right now. So it's a tough thing. We'll have to see. Remember how we did our support resistance thing before? Well, we already know that we have this little area right here that definitely, as you can see, support. This is where we got a lot of trouble, indecision. This is where it became resistance. So the key is, what is it going to be now? Are we just going to make a move to the upside and fall off? The trend is lower, as we can see. Lower, lower, lower lows. Right now, we're trying to pick a bottom. Absolutely not. Today's trading, if we were to end like it is here, it is somewhat of a short-term negation of the downward trend, meaning that it is not, we're not looking at this as a buy signal. This is a pause for the cause. I would use caution here. If you're going to be a bull here, definitely make sure you keep your stops tight, just a little bit lower than the low from last Thursday, because trading below here keeps this market on edge. Now, this thing has been a choppy beast. If you look at these on the daily basis, it looks more like they've been having pretty good moves. But look at this. We trended down into here. This is where we had this nice little short-term buy signal, had a little reprieve, fell off of the really short-term target to the upside. Resistance was strong. Look at this trading here. Up, basically down on the day. Then the next day reverses gears. Looks like it wants to break out to the upside. It doesn't. It reverses gears, wants to break out to the downside. It doesn't. Then it starts to slowly erode. This has been a beast of a trade. A lot of choppy action within this trend. It has been trending nicely, which most currencies do. But boy, within this daily range, I'm talking up and down, just like this on a daily. Looks crazy how tight this range is. I mean, really, it's a $5 range we've been chopping around in the past 5 months, in a violent way, where it's had most of the moves. Then it consolidated. We have this consolidation here, consolidation here, consolidation here. It's crazy how we've had these pockets of consolidation. So, usually the US dollar Swiss would be a flight to quality, meaning people would buy the Swiss over the dollar, just like the dollar is flight to quality too. The Swiss is not the flight to quality currency it used to be. It was, you can see how it had been weak against the dollar all through the beginning of the Ukrainian conflict. Now it's starting to come back a little bit. That's probably because of some of the changes in the central banking attitude from the ECB to some degree, and also with the Swiss. However, overall, we are still looking at the U.S. dollar Swiss going back to parity before the year is out. Especially, I think this is more oil related and stuff like that. If we have an uptick in oil and once we get another sell-off, another leg lower in the Treasury bonds and the 10-year note futures and cash will drive rates higher, including the market rates, and that will put a lot of pressure on the U.S. dollar Swiss. Meaning that the dollar will gain strength and the Swiss will start to become weak off of that. At least fundamentally, that's what should happen in those trend-driving capacity variables, if you will. So we'll see what happens. I don't think the Fed's going to change its stance. It does seem to be lightening off the gas pedal a little bit as far as rates, though. Are they going to cut rates? No. Are they going to stop raising rates? Probably not. Are they going to raise at the rate that they have been? Probably not. It looks that originally we had 3/4 of a point built in to the next couple of Fed meetings until basically the last one of the year. Now that's not really on the table. We're still looking for rate hikes, but only a 0.5 point. So that'll be significant when we'll talk more and more about that as we get towards that time. So as far as where are we going, be careful. If we fall below this 93.73, don't try and catch a falling knife. We've already hit our targets. There's not much to the downside here. Now we have to start looking back into this area here for support and resistance. Right now we have to, let's see how it pans out the next couple of days. Dollar strength the dollar's been under so much pressure with this market. It looks like we are going to get a short-term boost. Is it going to be like this little couple day period here? I would say at least we're going to see this over today into tomorrow's trading. Are we going to get a rally like this or a rally like this? That remains to be seen. Let's see how much dollar strength comes in versus the other Forex markets. So the US dollar switch, it's not as complicated as the Canada, but we don't have as much of a driving force to say that this trend could reverse gears to the downside, to the upside in a strong way, but we also don't really have enough to say that this market should remain under pressure. So can we go into ounces for checking your opinions? Can we go into, I'm not sure what that means, but I don't know. Is Binance Futures the same as Forex? Is Binance Futures is the same as Forex? No, it's not. Through Binance, you're talking about the cryptos, and they do have some future stuff. I know that is a little bit different. They're still derivatives, but no, it's a little bit different. Although on Binance, I do believe now they do have some FX where they funnel it out that you can trade FX through it too. But I would use caution with Binance and stick to one of your majors. In fact, if you're looking for something like that, all I can tell you is I don't know what part of the world you're in, but this broker right here is one of the only 3 allowed in the United States. It is one of the truly the best, if not the best, out there. And you can see, check it out, the link right here. I'm putting it out for you on both Twitch and YouTube. Forex.com, without a doubt, they're fantastic. They're regulated. They're straight. They're not like FXCM. That's one reason why they're out of almost every country. There's still some vestige of them left. I would use caution with even some of the bigger ones that are like them because they are just not as straightforward and as regulated and as honest. Forex.com has the least number of problems, as well as they haven't had to pay the fines and fees for irregularities and basically ripping off their customers, so which almost all the other ones have. So there you go. There's a little plug for that. Got that out for you guys. All right, so US dollar Swiss, we're pretty much done with this one. Once again, below 93.73. If we come back on support, if you're looking to buy it, you got to wait for a valid signal. We don't have one right now. It looks like it's trying to form a little bit of a bottom. Let's see if dollar strength can prevail. All right, US dollar JPY. This is one that had a lot of numbers that came out today and a lot of indecision. So it tried to sell off. Now it's just kind of slightly lower on the day. Not much of a range. It's tight. It's winding its coil. Overall, this thing is still a bull. I think that because of oil prices and especially with the interest rates trading at the levels that they are trading at in the U.S., that's pretty much caused this chop and this pullback here. When you look at the Treasury bonds, we've had this rally. Let's get rid of the volume here. Just to give you an idea of trends. You look at this mid-July or mid-June, all the way into the beginning of August, the Treasury bond market has been rallying. Okay, so it's mid-June. All right, so we go to mid-June, and we go all the way up here to mid-July. All of a sudden, we get this sell-off. Why do we have this sell-off here? Well, interest rates were going the other way, so that means the U.S. dollar is falling under pressure for one variable. However, oil was still very, very high. Now we have oil that's come back a lot during this period at the same time that rates have gone down in the market, and that has pulled. That's why we have this pullback here. And look at this, August 2nd. Let's go back to here. What's this? August 2nd? Right there. This was a key sell signal right here. So for any of you that are out there that trade with with Japanese candlestick patterns, you know that this is what? It's a bearish engulfing line sell signal. Any one of you that reads the Tiger Forex report written by myself for TFNN, you would know that we told all of our customers about this signal, saying that, hey, this is where we are going to probably see a little bit of strength start to come back into the dollar. All right, so August 2nd, boom, we had strength that came back into the dollar. Right now we know that the bonds, they've come back over the past couple of sessions here, and then we bottom back out on Friday. Today we are higher, so you see this. Here's a reprieve. This means rates are going lower. Oh, look at this. U.S. dollar yen trending lower, holding on support. So right now it has there's the fluctuation in interest rates is having a big issue on the U.S. dollar yen. Overall, we are bearish 30-year and the 10-year, and because we know the Fed is going to be raising rates. We have had a corrective move in the interest rate markets, just like we've had in all these other markets. We are looking for these turns are most likely occurring right now. The only one that's kind of a counter trend turn would be the one that we were talking about potentially in the pound U.S. dollar. But U.S. dollar yen, we're looking for higher levels. If we fall below $1.3182 here, remember that the line in the sand, right now the Bank of Japan isn't going to do anything because we are so close now to this 130. Let me type this in. 30. So 130 even. Back when the yen was down here, the Bank of Japan said if it gets up to 130 even that they would intervene. Well, that never happened. The Ministry of Finance backed off as well, and we've shot all the way up to just shy of 140. Well, I'll tell you what, baby, we're going up to 140. The only thing right now that is holding this rally back, this is viewed as a corrective mode. Remember, this market has been rallying for a long, long time. Okay, this isn't a bull trend. There's no doubt about the fact that this isn't a bull trend. Is this topping? Has it topped? Short term, yes. I would be very leery trying to call a long-term top with this move. Okay, it's very dangerous to try and do so. Now, if we use the low here from August 2nd, we know that's a key interest rate low day. This upward sloping support, just like this downward sloping resistance, are in a good plane. They're basically like 45-degree angle lines. This market is wedging. If we fall under the support and fall below 131, it's possible we could come back down into this area over here. If we come back down here, the only thing I could see that would really spark this would be if we have a big sell-off in oil. So if you go to our markets page here, you go down to commodities, you can see, remember, our futures is all on a lag. You cannot broadcast live or stream them live. It's against the law. So it's not about us holding back from you. But on our website, you can get access to these charts. All right, so you can see that oil has had a little bit of a bounce. It was lower on Friday. Let's take a look. We're on the CME site here. Markets, we go to energy. Let's see where oil is on the day. It was pretty quiet earlier. All right, look at this. Crude's down to 88.35. All right, so 88.35. Wow, that's back all the way back down here. This is why, let's put it right here. There we go, it's close enough. So look at this, it's back near the lows. That's a big deal. Now look at this also. August 2nd or August 4th, around here, the market rallied, started to bounce and rally back up. Now it's back near these lows again. Let's look at the US dollar yen. Same difference. Oil had been rallying, so had the US dollar JPY. Oil comes back, it's under pressure. Even today, it's flirting with support. So oil is the drag here. The only problem is you have a tug of war between oil and interest rates. Which one's going to win? Well, oil could keep on trending lower. Odds are that it's pretty much bottoming. I think it's this. I would be very careful being a seller of the crude oil market right now, or loading up on puts. Hey, we got some talk here. We got Gary. We got joining us on YouTube. Hey, nice. Thanks for the comments. With the Fed reducing its balance sheet, will this move the U.S. dollar? Great question, Gary. Okay, for those of you guys that are just joining us or have been with us, we got a question from our buddy Gary, who comes in every once in a while on YouTube. Thanks again. Always with great questions. His question is, with the Fed reducing its balance sheet, will that move the U.S. dollar? Absolutely. So by the reduction of the balance sheet, okay, that means that should put a weight on the pricing of the 30-year, the 10-year, and other interest rates. Short terms, obviously, we know the yield curve is in flux. However, those bigger instruments, as they come down in price because of less demand, because the Fed is not propping them up, that means that the market rate goes higher. Just like the fixed rate from the Fed is going up, the market rate goes in tandem. While those are both going higher, that helps to add strength to the U.S. dollar. So that means that any market, if the U.S. dollar is falling back against the market, like say the U.S. dollar Swiss, it will not fall as much or as quickly because of the interest rate variable, because that changing of the balance sheet structure is something that should give strength to the U.S. dollar. That's another reason why you're not seeing such a huge sell-off in the U.S. dollar yen like we're talking about right now. Great question, Gary, as always. Best guess when oil hits a bottom. All right, that's another good question too, because if you watch my videos, you know that oil is a big variable for certain currencies, especially the U.S. dollar yen. So let's take a look at this. So if you read my Tiger Forex report, we actually have a little chart of oil and stuff like that, and we get into it. So right now, yes, we are coming down here. If you look at on the weekly basis, okay, we are treading some serious ground here. I would use this little pocket here, saying this would be the extreme. Okay, so I really don't think, now if you see what I'm doing here, the 0.618 is right above where we're at right now. Okay, so as far as on a Fibonacci basis, if this is just a correction, we're pretty much into the bottom area here. Also, if this is just a correction, we have the 0.786, which is the extreme, and that fits below this area here. So where we had resistance, is it going to become support? I think so, and I think that this is where the bear trap lies. So Gary, this is a fantastic question, and I'm going to show you guys how this totally relates to the Forex markets. So let's just say, for hypothetical reasons, that we're right about this, that the crude oil market does dip down in here and bottoms out somewhere between, I would say, at the most 76 being the low. Now think about it, if we get oil back down to 76, all the pundits that are bearish and saying, see, we're done with oil, Bidenomics is working, and all the people who are worried about drilling and stuff, you're off base and whatever, you're out of your minds. The reason I'm saying that is because I'm a futures guy. If you go, the oil markets have rollovers, which is expiration, every single month for their options and their futures. Okay, most futures, financials especially, are done every 4 months, or every 3 months. There's 4 rollovers a year. If you don't understand what rollovers means, it means that that's the different delivery months, and as they expire, they come off the board. So right now, you're looking at the front month. If the front month does get down to 75, let's say in the the September contract, big deal. Right now, the October, November, and December contracts are all trading at higher levels. They're trading higher than where we're at right now. Okay, so that means that the expectations are still at a premium. People are paying more for oil in the future than they are right now. Well, if they're paying more for oil in the future and then they're going to sell it, do you think they're going to sell it for less than they paid for it? Probably not. If anything, they would restrict their supply and wait and not deliver it, which means supply goes down and demand obviously gets forced their hand, and that means pricing goes up at the pump. Okay, so that's where this is a bear trap forming, and that would be also perfect with what we're talking about here for the US dollar yen. So let's just say hypothetically, great question once again, Gary. Let's use a little drawing here. So here's where we are today. We are right here, okay? If oil continues to slide and the interest rates continue to go up into the Fed meeting, well then this is where we should come down into, somewhere in this area right here, okay? That would be very, very likely to occur, okay? Because as oil is under pressure and as rates are under pressure, meaning going lower, higher in price, that weakens the dollar, and weaker oil strengthens the yen. So that means you have two variables that we work against the US dollar yen and help to bring us back towards this 130 area, maybe even lower, okay? Now, the big question is this overall trend done or not? Well, I got to ask you this. Do you think that the Ukrainian-Russian conflict is going to be over within the next 6 months? Especially as we head into wintertime across the globe in all these areas that we're talking about. If you think so, then I would say that, yeah, play the short side, look for it to not only get down to 130 area, look for it to get down to 126, 124, 122. We could let me get rid of that. We could very easily start to come back down into these lower areas, okay, for the US dollar yen. Okay, very, very possible. In fact, let's go back to our drawing with the rectangle here for where we have support. So down to here. Okay, so if you guys are with me, if any of you have any questions on YouTube and Twitch about what we're talking about or laying out here, please jump in real quick, all right? I know we got a lot of you. This is great. You guys are fantastic here, jumping in with the comments. I really appreciate it today. Especially we got some good numbers on viewers here on YouTube and Twitch. Wish I could have Discord going, but it's like I said, our streaming software. We are realigning everything here, and as we're starting to get it flowing here. I hope you guys are hearing and seeing this clearly enough today, so we will have it fully functional, hopefully sooner than later, but it's been a rough couple of weeks, so we're glad. We haven't been on vacation, believe me, we just have not been able to stream. It's been really tough, so thank you for your patience, and once again, joining us again. Gary, great questions. All right, so this brings us to here. Now, to the flip side, let's say that I'm right, and let's say even if oil does get down to 75, unless it's going to continue lower, and and all the people out there say, oh, everything's working, or everyone's fear of inflation, everything was unfounded. Well, I think you're wrong about that. I think that one of two things is going to happen. Well, obviously, we could continue to go lower, okay, should those markets continue to trend lower. Or I think what's going to happen is we would end up not just coming back into this area, but continue going like this. And this is if we have a significant sell-off in oil and also a significant rally also to help perpetuate that in the U.S. 30-year bond and 10-year markets. The odds of the interest rates pushing more of a rally, remember, we already looked at that. We have a short-term high. We would have to come back above this 145 area. That's getting tough. I mean, right now you could say that if the market has turned and the U.S. Treasury bond market is a long-term bull, that right now we're just correcting back and then we're going to rally, which right now we are short-term. Yeah, but however, I just say that that's a very big issue. The sell signal's in place. We really got to get above this basically 146 even. That would really unhinge things, and that would really help to put the U.S. dollar yen through this area, maybe even down into this area here. It's just not likely to happen, especially since we have a Fed meeting a month away and everything else that's going on in the economy. Just because we've had some numbers that have, once again, if you were listening at the beginning of the video, the numbers, the CPI, PPI, unemployment that everyone, the pundits are saying, oh, look at how things are so much better. Everyone's unfounded with their scaring the people in the marketplace and whatever. Well, guess what? We're just laying off the acceleration of inflation right now. We are still in a horrible situation, and we're heading into winter time. My call is that as we roll through expirations, oil prices are going to be popping back up. We're going to be back around the $100 mark and also moving towards 120 and 130 as we go end of the year. And if that's the case, and interest rates pricing goes down and makes new lows, which it should, because we have 3 Fed meetings left, all of which they're expected to raise rates. And unless that changes, you know what that means? We're going to 140 and beyond. Okay? That's where we're going. We are going to 140 and beyond because the pricing dictates that based off of what we've already seen in the recent future or recent past of where the market was at. So use caution, look for a buy. Right now there's a lot of indecision with the yen. I think it's going to be choppy, but if oil, unless it really starts to sell off, if it gets a bid and it starts getting back, remember we were looking at oil, it's hanging on its lows right now. Okay, this is on the weekly. Let's put it on the daily. Okay, so it's been rallying for a few days. Now it's back on its lows. If this thing turns around and goes to the upside, remember this trend is pretty steep. Let's go out to here. We are today back down here. We could have breached this downward sloping resistance line, keeping the trend intact, and we could already be having a breakout to the upside. By attrition, if this, we can take this line out. So if you are bearish, the crude oil, and remember, markets go out like they come in. This has been a steep decline. We've been breaking pretty much lower, now for 2.5, almost 3 months straight. This is a big deal. A bounce is expected, and that's where we will see another rally in the US dollar yen. So great question, Gary. Great way to tie in how we wrap in these other markets. Remember, I always tell people, they ask me, what's the best indicator or combination of indicators? I always tell them the very first best indicator you can use is the markets themselves. They are in real time. That is the action. There is no lag. You just have to understand the correlations and how the trends interweave with each other when they are, some are in tandem, some are divergent of each other, and we try and teach you guys in every webinar about how that goes. Hey, thanks for another like we got on YouTube. You guys are fantastic. Make sure you leave some comments too if you don't mind. We really would appreciate that. So, but we do appreciate you without a doubt with the likes, and also hopefully we get some more subscriptions from some people. Hope you passed it on to your friends that we're out here in Forex land and trying to help all you guys out. And the markets are quite the storm without a doubt on any given day, and through all of our experience and stuff, hopefully we can all learn from each other and make each other better traders, and save ourselves from some bad opportunities. So if you haven't done so, I'm sharing this link out on Twitter real quick to post from YouTube and Twitch to help try and get some more viewers. If you can do the same, I would really appreciate it real quick while we're watching this video. And if you got any questions, we're going to talk about some more Forex markets. Moving on, but let's talk about the Aussie first. I don't know, how many of you are Australian dollar, US dollar traders out there? I currently do not have a position on. For transparency's sake, I did tell you I have one on in the euro. I am also in the yen. I am currently long, so I am going against this market where I've been long. I've been basically long the US dollar yen for over a year now, so except for a couple different days. And right now I'm long-term long. I am taking some heat on this position, obviously, but I will ride this one because overall I believe in the longer-term fundamentals that just don't look good for this market. So otherwise, that's it. So I do not have a position on the Aussie US dollar, but we are going to talk about the Aussie US dollar. So let's get into it right now. All right, so today you can see very negative coming off our lows. I think a lot of that has to do, once again, with the sell-off in oil and also the rally in the interest rates. Here's something you got to watch out for. This has been going on for a month now. The bonds in the 10-year find strength off of good and bad numbers, and reflectively during the day will rally and rally and rally, which puts pressure under the dollar. Then you know what happens? We get to around 1 o'clock in the afternoon Central Standard Time, 2 o'clock New York time, and the bonds close at 3 o'clock, the cash bonds, cash 10-year notes, the whole Treasury market in New York time. That's 2 o'clock Chicago time. So, and that's also when the bond futures in Chicago close at 2 o'clock Central Standard Time. Now, yes, you can still trade the derivatives to some degree after 2 o'clock, but that's basically the rollover end of day time. And the cash market is closed. That's the biggest thing. So when the cash is closed, that helps to restrict the futures usually, or it sets up a big setup for a discount or a premium to arise overnight. So forgetting those variables, but understanding that they do exist, that's why I see the Aussie coming back off its lows today. Does this mean that the sell-off is over and the longer-term or short-term uptrend is intact and we made a nice higher move low today and we're going to bounce? Well, it could. I would use caution. I would expect to see more follow-through to the downside. But once again, I think it's because the bonds are higher and oil is lower that you're seeing this bounce off of the lows. We had a great sell-off today. Remember when we first started talking about the Euro US dollar at the beginning of this webinar, it was on its lows. Oh, look at it. It still is. So the dollar has the upper hand today. So I think that now that we're at this lunchtime trade, we have 2 hours till the bonds close, that you're seeing this little lift. I would use caution. I would not doubt that you will see this market play with new lows or near the lows again this afternoon instead of coming all the way back up to make new highs on the day or something like that. I could totally be off base and wrong, but I think that that really is the key. What I would watch out for is if the market gets above this last previous swing high around 71.38, use caution, okay? But let's look at where we are right now. Let's take this into account right here. So we have, let's see. Look at where we are. We're right into this kind of critical support resistance zone where we came above it. Now we're right inside it. We flirted with the bottom. The question is, do we go higher or do we go lower? So once again, I would key off this for shorts. If you're short, keep your stops tight above here. The trend is definitely going to go blow it up in your face. Expect a wave of fresh buying. However, against this area, it's a good short-term sell. We could see some follow-through tomorrow. I think it's very likely. This trend, oops, let me get this moved over a little bit. This trend is pretty steep. So the ability for it to maintain itself may diminish over the next few sessions. So we have this high right here. You can see that, look at this, how we have this high here, right into our lows right here. We're finding support where we had found resistance. The question is, will it hold or not? If dollar strength truly is present, if we see a recoil in the Treasury bonds, meaning a sell-off there, I think we will see a follow-through to the downside. So right now, I'm an aggressive bear against this recent swing high. I'm looking for a breakdown to test the recent swing low here around 68.70. If we can fail from there, I think this is a key area holding the market up. Then I would expect to see a lot of lower trading. If you look at from just right in here, this is another big support resistance area level. So where the swing high is, I think is very indicative of what's going to maintain this trend. Remember, if we get back down into this lower area, that would confirm a lower move low and a lower move swing high, just like we've had here, confirming the downtrend. Very likely that that is the case. So be cautious getting too bullish on this market. Odds are, as you can see, the trend overall long-term is a bear. We're looking for it to fall apart once again. So expect a test of support and unlikely to see a breach of resistance. Okay? Now, should we breach resistance and get above 71.38, well then all bets are off. The trend is still in place short term, and we're looking for a rally to take out and challenge this last swing high here. This would not really make us a long-term bull should it do so, but it would have us set up for a big wide range trade, which obviously at that point it would be clear on the charts. But let's see how that thing's panned out. I am more bearish than bullish. We'll see what happens. Interestingly enough, we have the New Zealand dollar, US dollar, in a similar state. And I would key off of the last swing low and the high from Friday. And the big thing is today. So we're a little bullish the dollar, as you can obviously tell on a daily basis today. What we have here forming is a bearish engulfing line sell signal. If the market closes where it's at right now, this would be a short-term confirmation of a pause in trend, at least as far as a signal basis, making this swing high very critical. So if you're an aggressive bear, now remember today we could still rally and this could be positive and we can make new highs on the day before the close and rollover of today's trading. It has to be like it is right now. Okay, if it's not, then it is not a signal. If it closes around where it's at right now, this would be a bearish engulfing line. This would have us targeting a minimal slide back towards this little area right here. Oh, look at that. It's right where our low is. So Fibonacci, just if this, let's say that the market's turned and we're now a bull, okay, a long-term bull. Well, if we're just going to have a corrective move to the downside and catch some support, this would be the area, right? And then we use our old support resistance tool. Look at this. That fits right in there. So if this is only a short-term correction sell signal, instead of going with the long-term trend, this is about all we'll see as a correction right here, down to around this 62.64 to 62.10 area. This should hold up the market. If it fails below 62.10, well, then obviously this confirms that this was a longer-term lower move high in a bearish market, and that confirms that this rally from the middle of July into the middle of August is nothing more than an upside correction. Very clear, very positive that this is, I'm very positive that this is how things are shaping up. Let's see, we do need a confirmation today for that to be the right thing. Now, if you want to learn about how to trade that bearish engulfing line, you can go to our products, courses, and services tab, go to high probable Japanese candlestick patterns. We have a whole page on a book I wrote about how to trade these. Here's the cover of the book. You can buy it, you can share it, you can preview it. I would prefer you buy it, actually. You can buy it, it's in Kindle and also in paperback form. Paperback is probably better, but it's all color too. Most authors that do everything in black and white. Ours have all color charts and things. It makes everything so much more understandable when you're reading and going along with the illustrations. So it also drives up the cost of the book. So it's not that expensive a book, and believe it or not, more than half of the cost of the book goes to production and also Amazon split. So for me, do I make money on the book? Yes, I do. On a percentage basis, I make more on the Kindle than I do the books, but the books is definitely a better way to go. And we're actually thinking about coming out with a hardcover version because now you can finally do that on Amazon. Anyhow, so we have our downside numbers here to the upside only if we get above 65.82 to become really bullish on this market, and right now we don't see that happening. Now let's go to the US dollar Canada. I don't know about you. Any of you guys trade the US dollar Canada out there that are still listening to us on YouTube and Twitch? This one has been a beast of a trade, has it not? I mean, I have to tell you, this has been one of the toughest trades over the past 5 months of any of the Forex currency markets out there. We're not even going to get into it. We've been talking about this for months. Key off the low from a couple sessions ago and key off this recent swing high as well. We're looking for a breakout. The short-term trend obviously is leaning towards lower move lows and lower move highs. We tried to spike out above that. You can see we're trading right on this line right here. That's pretty critical. Unless we breach this area here, I think we'll see a little more follow through and bobble around support, or what we could have is just a big, sloppy, choppy, very bad range trade that goes on through this whole little section right here. This is just ugly. Just there's, you can see there, it's spiking around this pivot level here and also right around here. We had a nice trend going on here. Overall, I mean, you're seeing some good peaks from swing low to swing highs, but everything in between. Look at the volatility of these spikes. Look at how it's traded, how choppy each of these individual days are. It's got to be a nightmare for any longer-term trader and intraday traders too. It's got to be just a chop fest. So I really don't have much to tell you about this one. There's nothing really there to go on. There's no buy signals. There's no sell signals. Fundamentally and technically, it's completely irrational and a mixed bag of goods. So I would stay away from this one. If you want me to look at something in particular, I can. But otherwise, we're just going to really say stay away from this one for a while. Okay? So, excuse me, that's what we're looking at there. Now we're going to take a look at Btc Usd. Yeah, we're going to look at a little crypto, my friends, just to give you a little take on what's going on. Obviously, Bitcoin a little lower today. It's been just grinding higher up to this 24,000 area. I don't know. Everyone's trying to get bullish on the crypto space again. I think that we're just looking for, because the market's been stronger and the dollar's been weaker, I think that's why we've been having this. If I would say look for this to sell off big again after the elections for sure. We have a lot of quietness going on because of elections. There's a lot of things that are going on in the government and they're holding back on just because they know it's a political nightmare and suicide if they do. I guarantee you, no matter what the outlook is or the actual results of the midterm elections, the day after the elections, the government starts to hit hard on things that are going to really hurt our economy. Now in the EU, they have they're going to start bringing back vaccination statuses for one. More and more companies are going to be restricted to not hire people, or they're going to be mandated to fire people who are not vaccinated from COVID-19. They're going full bore on this. We've got to remember, Operation Warp Speed is soon to expire. All of the funding, because everything right now is free. Nobody pays for anything on COVID. You don't pay for vaccines, you don't pay for treatment, you don't pay for testing. Everything is federally funded. That gravy train is gone in a few months. Okay, you can tell by the ads are not out there as much as they used to be. Even the news isn't pushing it like they used to. You know why? Because there's an election. They're going to use every last dollar of COVID marketing money, which it's incredible how many hundreds of billions of dollars have gone into the marketing of the vaccine. This has never happened in history that the government has spent so much money marketing something, a medical treatment, a test, to the American public, let alone to the world. Okay, but remember, Operation Warp Speed, signed in by the orange-faced man, one of the dumbest things that he did for sure, because if he didn't sign that, we wouldn't have had the ability. These mandates by the blue states never would have happened. They wouldn't have been allowed to get away with it for as long as they have, and the businesses wouldn't have been able to do what they've done. That is restricting employment. It means the medical sector. You have all these talented doctors and nurses that will not be returning to work because they can't go back to work, because they won't go back to work because they're not going to be forced into a medical treatment. It says a lot when medical professionals don't want to take something. You can't say they're denying the medical science, that's for sure. You know, I mean, you have in the airline industry, the pilots and everything else that's happening with that. They're bringing on new people into positions that are so untrained, do not belong in these positions, and are going to, the safety is just out the door, you know. So, and these things are all going to impact the market. Earnings, remember, they've been beating expectations because they've dropped expectations so much as earnings, and we're coming into earnings season. That, if that starts to be a bubble and the market starts to take a hit, Bitcoin is going to be back down to 18,000, 16,000. Remember, cryptocurrencies were originally, we were told that they would be a hedge against inflation. We know now for a fact that they are not. Now, Ethereum is a little bit more of a bull, and I'm not so bearish on this one. I still think we can have a nice correction to the downside. The nice thing is that this technology is viable and usable and more mainstream and integratable than Bitcoin. So there is some rationale as to why this is staying. quantum computing, because of supply chains and microchip stuff that's going on, is not coming online as soon as was originally intended before COVID. If COVID never happened, right now we would be on the verge of having quantum computing taking over everything in technology over the next year or so, and that would be just radically changing everything from your computers to your cell phones. And guess what? Cryptocurrencies would be obsolete. They would be completely obsolete. All cryptocurrencies will be obsolete with quantum computing, except for those that evolve into the quantum computing environment. The environment they're in now and the way that they function right now will be a buggy whip, and that's just a fact. So that means that the overall value of these cryptocurrencies, if you want to know which one's going to be viable and good in the long term, ask yourself this: which one can survive and integrate and move into quantum computing? Because we're a couple years behind it. Now it looks like we're not going to enter that real phase of technology for another 2 to 3 years, especially under the current administration in the U.S. and what's going on in the EU. We'll see. I mean, the midterm elections could shift things greatly, and if they do, and we have a change in that, if the economy can get stronger or at least stabilize, if inflation can get under control truly, then we might see quantum computing come sooner than later. Otherwise, as more and more supply chain things break down, like I heard a funny joke the other day, or it sounded like a joke to me. It was a friend of mine who's said that, well, the ports on the West Coast now are all clear. There's not tanker after tanker all piled up waiting to be unloaded. I'm like, well, yeah, but that doesn't mean anything, because the things we really need to be arriving now or in the next few months are not coming. The stuff that has arrived, the stuff that had to arrive already 6 months to a year ago, and that's great that we have a surplus of wicker chairs and umbrellas for the backyard, but things that we really need, we don't have, and we're not going to get either for a while, and it's becoming more and more restrictive. So once again, I've been saying it all year: buy your Christmas presents now, folks, because if what you want is if you want to have what you want at Christmas time, you might as well get it now, because if it is available, it will be more expensive, and that's if it's available. All right. Monero US Dollar, this one here, also, this one we're kind of bullish on. We could see it correcting if the broad cryptocurrency sector takes a hit. But overall, we're looking to see this climb back to the 220 to 240 area. Very solid, this technology. Most likely it's going to be maintaining a little engine that could type of scenario for the next year or two. And I would say that the value, it's very unlikely that you're going to see it continue to be suppressed. I think you found overall a very good rounding out area where getting back to 100, 120, this is just a buy. It's too good of a buy. It's just the value, the floor is higher than 120. The real floor is like 180 to 220 really, and we're below that right now. So this is at a good discount. I would look to, if you're not long this, look to buy it again down, because we have some interesting numbers coming up over the next week and a half. But if you are not long, I mean, nibbling in here and looking to scale down buy is not a bad idea. I wouldn't load up too much on this, but I still think that this has a really good shot at going up to 200, 220. Now here's an interesting one. So Doge has had a nice little bounce, oh boy, from 5 cents to 8 cents. Yesterday it had a big rally. Interestingly enough, I've heard some people who don't really trade the crypto sectors and stuff, and all of a sudden there's all this talk about the Doge again. And this is where it gets into the whole pump and dump Ponzi thing. The Dogecoin technology is completely worthless. So it's nothing more truly than a Ponzi scheme, like most of these cryptocurrencies are. People are just coming out with an idea and an assumption that their technology may be integrated mainstream, and then that's going to become part of payment processing and this and this and that and blah blah blah. Well, here's the thing: is every company is not going to keep on jumping from one technology to the next. They're going to grasp on one mainstream technology that works, that is very integratable, relatively affordable, and then they're going to stick with it. They're not going to just keep jumping from one cryptocurrency to the next to use as payment streams or moving data or whatever, blocking data from one, whatever. There's all kinds of different usages for these technologies. So the reality is, this is nothing more than a pump and dump. A lot of people are looking at this because they're like, oh, well, it's so cheap. You know, they're like, well, I can put, you know, a couple $100 in the Dogecoin, and if it doesn't go up, I lose a couple $100, but a couple $100 doesn't buy me much Bitcoin or Ethereum, so even if it does go up, you know, what am I going to do? I'll make more off of Dogecoin going to $1 than I will Bitcoin going to $100,000. This may be true, however, the odds of Dogecoin going to $1, let alone sustaining a trade to $1, are very, very poor. The only way that it's going to happen is if you have another marketing pump and dump bubble kind of thing going on, which definitely happened with Dogecoin. I'm sorry, but when you have something touted as an investment or a store of wealth and a hedge against inflation, and you put billboards up and ads in magazines and all over the internet to buy Dogecoin, what asset class out there do you have marketing telling you to buy something? That you don't have. You have some marketing out there on products that are available, but and by no means is anything regulated or anything that holds its salt ever touted that way. So that's something to keep in mind. I would be very mindful of this moving forward. So if you own some Dogecoin, or if you want to get into this one, I'm not going to. I don't tell you what to do one way or another, but odds are pretty good that you're going to get burned. And if you are going to get into it, as soon as you start to see a profit, take the money and run, baby, or at least start to peck it off the table. Get your original investment out, and then let it fly and see what happens. And God bless you if you hit $1 billion on it. So, but I see it as a pump and dump scheme. So just trying to keep you guys safe. So let's go back to the Euro US dollar one last time. Look at this. We've been talking all this time, and it just stays on its lows. That's why I think, remember I said you have that little reprieve because of the treasury markets, where the dollar is under pressure right now, short term. Give it an hour and a half. I bet you see the turn. I wouldn't doubt this, that we see the Euro US dollar make lower move lows on the day still today, just by the way that it's acting, and we're seeing it in tandem, excuse me, with the other markets. So we'll see how this goes. Really appreciate all your questions out there today. You guys were really fantastic, especially you, Gary, once again coming in. Let's see. You like the orange face man? You like that one? Yeah. So you know what? I never liked the guy, but I have to tell you one thing. On my business and being an independent businessman, I've never had a better stretch of 4 years in my whole adult life as I did under the orange face man. You know why? Because businesses were thriving, the attitude of business was growing, and you know what? I've seen my business in finance do nothing but deteriorate for the past 2 decades, and during those 4 years, it actually stabilized. You know what's happened since then in the past year and a half, especially under COVID and all these restrictions? The Board of Trade, the CME, those buildings are basically see-through empty buildings now. There's very few people back. The CME does have their people back in their offices, but all the trading firms, even and all the algo groups that were housed in there, they're gone. They left. They didn't just leave and go to the suburbs like they had been doing for the past 2 decades. That's where they were going. They were going from Chicago to the northern suburbs, western suburbs, anywhere but in the city. And now they've left the state. They've completely left the state. Full-blown operations are now in Florida, Texas, Colorado, Atlanta, and remember, I've been saying it for a while, the CME, it's just a matter of time, and they are getting ready to pull out of Chicago. So, and that's probably going to happen sooner than later, because it's a ghost town in the financial district. No matter what, it is a ghost town. There is nothing left in the world of finance. Yes, that's true. The trading capital of the world for everything except for equities is Chicago, and you know what? It's all digitized and no one's left. It's just a fact. It's just a fact. So, but all right, my friends, thank you very much for your time. We'll see you later. We're going to broadcast a live signal on a 5 minutes trading thing that might help some of you guys out, give you something to watch later. So we're going to get that set up. And until then, I just want to thank you once again very much. This is Teddy Keckstedt from Forex Trading Unlocked. Check us out at www.forex-trading-unlocked.com. Go to our YouTube channel, Forex Trading Unlocked, on Twitch and on YouTube and on Discord. Sign up, follow us, and hang out with us when we have our live videos. We have more to come, and we're always looking to expand our content. Thank you. Oh, Gary, you are welcome. We'll see you soon. You guys have a great trading day, and watch out for that bond close coming up today. All right, guys? Take care, and I'll talk to you later.